So, you've been trying to keep up with the US housing market, right? It's been a wild ride, and trying to guess what's coming in 2026 can feel like a total shot in the dark. Well, you're in the right place. Today, we're going to pull back the curtain and break down the forces that are really shaping our housing future. And let's be honest, this is the big one. This is the question that keeps so many people up at night. Whether you're looking to buy, sell, or just stay put, you want to know, what's the price tag going to look like? Are we ever going to see affordable homes again? It's a huge question, and today we're going to tackle it head on. And to do that, we've got a clear plan. We'll start with the big question itself. Then we'll dive into the tricky puzzle of interest rates. After that, we'll get into the massive housing shortage and then talk about the new wave of buyers changing the game. Finally, we'll put all those pieces together to see what 2026 might actually look like. All right, so first things first, let's just set the stage here. The last few years have been a complete roller coaster, and that's left a lot of us feeling pretty uncertain. Well, that uncertainty, that's our starting point. It is so easy to get sucked into those flashy headlines, the ones screaming about market crashes or prices shooting to the moon. But in this explainer, we're going to go deeper than that. We're going to look past the noise and focus on the real, fundamental drivers, the economics and the demographics that are actually pulling levers behind the scenes. First up, let's talk about the price of borrowing money itself. We're talking, of course, about interest rates. You simply cannot have a conversation about housing costs without getting a handle on mortgage rates. They are an absolutely massive piece of this puzzle. And just so we're all starting on the same page, a mortgage rate is basically the fee you pay for your home loan. And it's not some random number pulled out of a hat. No way. It's directly tied to big decisions from the Federal Reserve and the overall health of the economy. Now, to really get why this matters, you have to see the history. I mean, just look at these swings. Can you imagine an 18% mortgage rate back in 1981? Then a total crash down to around 3% in 2021. And now the bounce back to about 7%. This crazy timeline just puts a giant question mark on 2026, doesn't it? Where do we go from here? So here's the bottom line. These percentages aren't just abstract numbers. They have a huge real-world impact on your wallet. A couple of percentage points can mean hundreds, sometimes even thousands of dollars difference in your monthly payment. It's the single biggest factor in determining how much house you can actually afford. Okay, so that's rates. Let's move on to the next major problem. Because even if you can afford a loan, you still have to find a house to buy. And folks, that has become one of the biggest challenges in the entire market. We're talking about inventory. Just take a second and let this number sink in. 7 million. That is the estimated number of homes that the US is currently short. It's a gigantic gap between supply and demand. This isn't just a small hiccup. It's a deep systemic problem that's been building for years. So how in the world did we get here? Well, it's not just one thing. Think of it like a perfect storm. For starters, we stopped building enough new homes for decades after the 2008 crash. Then you've got boomers staying in their houses longer, which keeps existing homes off the market. Add to that a rise in big-time investors buying up single-family homes, and you have a recipe for serious scarcity. Now, if you're someone thinking about selling your home, you need to pay close attention to this. This low inventory is exactly why prices have stayed so high, even with rising interest rates. When there's less competition, sellers have the upper hand. It's a powerful dynamic that isn't going away anytime soon. So on top of everything else, the rates, the lack of houses, we've got another huge force at play, a massive demographic shift. The people who are out there looking for homes are changing, and they're bringing a whole new set of demands to the market. And what's really fascinating is seeing what these different generations want. You've got millennials who are now looking for more space, good schools, the classic suburban dream. But then, right on their heels, you have Gen Z. And their wish list can look totally different. They want to walk to places, they care about sustainable features, and they want homes that are easy to take care of. The market is being pulled in two different directions at once. And this chart really tells the whole story. Just look at the first-time homebuyer market. Millennials and Gen Z together make up a whopping 70% of it. 70%. They are the engine of housing demand now, and what they want is what will shape the market for years to come. Okay, so we've got high interest rates, a severe lack of homes, and two huge generations battling it out. Now for the main event. Let's put all these pieces together and see what the housing market might actually look like in 2026. All right, let's connect the dots here. That huge inventory shortage we talked about, combined with all that demand from younger buyers, Well, that's why the forecast points to a moderate increase in home prices. There are just too many people chasing too few homes. At the same time, the general feeling is that mortgage rates will finally start stabilizing, and that stability, plus all those determined buyers, could lead to some modest growth in actual home sales as everyone starts to adjust. And this quote just nails it. If there's one thing to take away, it's this: don't expect a massive boom or a dramatic crash. The key word here is normalization. But, and this is a really important but, normal doesn't mean easy. That intense competition for the few homes available, that's probably here to stay. So, what this all means is that the ground is shifting under our feet. This isn't your parents' housing market. We're in a new landscape, one defined by high costs, low supply, and new demands. So, the real question isn't just what the market will do, it's knowing all this, are you ready for it?